All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. So today is Friday, November 4th. I'm ending this trading week on a high note. This week has been a good trading week, with the exception of Wednesday, which was November the 2nd, when the Federal Reserve, the Federal Open Market Committee meeting met, and Fed Chairman Powell announced the interest rate hike. So that day I did not trade. However, I have been trading throughout this week. And if you guys watched the previous video, which I have a link to in the description below, I mentioned that I was anticipating that the market would pretty much trade within a tight range prior to the Chairman Powell of the Fed releasing the interest rate hike. And that actually came to fruition, so the market prior to that interest rate hike announcement pretty much traded in a pretty tight range. And so I've been making money. Again, my goal is to make between $300 to $500 per day. And so that's been going quite well. And just to kind of reiterate as to how I select my strike prices when it comes to selling these primarily vertical credit spreads. However, I do sell single option contracts, but primarily it's vertical credit spreads. So my strategy, or what I look at that helps me to determine which strike prices I select is I look at the previous day's closing price. So when the market closed yesterday, the price was at $37.19. And so what I do is I look at the next day expected move. So the expected move for the next day is located here on this particular trading platform, and pretty much all trading platforms, Thinkorswim, Tastyworks, and other ones that I've seen. So the expected move for today, right, considering that the price closed yesterday at $37.19, the expected move today was plus or minus 53. So as you can see, the plus or minus 53 here. So I essentially just add 53 to the previous day's closing price. That gives me the potential upside movement or upside price of $37.72. And then I subtract 53 from $37.19. That gives me $36.66. And so I use those as reference points to help me determine which strike prices that I'm looking to select. And oftentimes I will go beyond the expected move. However, depending upon how the market is moving, as I'm looking at the primarily the 5-minute chart, oftentimes I will come actually inside and select strike prices that are, for example, on the put side, that are actually above the expected move. So the expected move to the downside is $36.66, but as you can see here, the vertical put credit spread that I've sold is actually above that expected move price. So I sold the $36.80 and I bought the $36.75 to create a vertical put credit spread, which benefits from the price of the underlying. The underlying is SPX. It benefits from the price of the underlying actually increasing in value. So when I put this credit spread on, the price of SPX was around $37.15. All right, but it was holding steady at $37.15. So that gave me the impression that that was a strong area of support, meaning that buyers were willing to support this particular price area on SPX. So I decided that it made sense to put on a vertical put credit spread, because if this is the area of support, and it seemed like it was at the time, then the price should not fall too much further below $37.15. And so I decided to actually come inside of the expected move of 36.66 and select strike prices that are above that particular price point. So hopefully that makes sense. As you can see here, is actually panning out. So if I just erase all this here, so the price has moved up significantly. And so the credit in which I took in for selling that vertical put credit spread was $165. And so as you can see here, I've made the entire $165 already. And we still have 40 minutes left to go before the market closes out the trading week. Closes out the trading week. And so I'm actually considering, as you can see here, looking at the 5-minute chart here, the price of SPX is starting to pull back. So I could potentially put on a let's just see here. Potentially put on a vertical call credit spread and take an additional credit, right? So put that vertical call credit spread on where I'm selling the 37.75 and 37.85. I don't like the credit, so I think I'm just going to accept the current credit in which I've already made of $165. Now in my Thinkorswim account, I have a similar trade on where I took in a credit of $150. Let me just show you how that looks on Thinkorswim. So as you can see here, here's the actual position here. So as you can see here, I sold the 36.75 and I bought the 36.65. I sold 2 contracts and I took in a credit of $150. So as you can see here, I've made the entire $150 already, and the market is still open. Now, the reason why I've made the credit or the entire credit on both trading accounts is because the price of the underlying is so far away from my credit spreads on the put side. As you can see here, it's 50, 75, roughly 70 to 75 points. My position is away from the actual price of the underlying. So as the price of the underlying moves away from your position, your P&L, your profit and loss, actually increases in value when you are an option seller. So your P&L will actually increase in value, right? So as you see here, it's increased to the point where I have made the entire $165. So 165 here, 150 in the Thinkorswim, so that's 315. So again, that's right in line with my with my daily goal of making $300 to $500 per week. So over the last weekend, maybe about 10 trading days, I'm up to 25.56 just over the last 10 days. So sometimes I do make more than $500 per day, right? But normally I just take whatever the market gives me. But again, the goal starting out is always between $300 to $500. Yeah, so hopefully, hopefully again, you guys are taking notes and learning, some things about trading options. Again, I always say it's an invaluable skill set to acquire, because essentially you can make money regardless of which direction the market moves in. It can move up or down. It doesn't matter when you are trading options. Yeah, so I'm back for the last quick update. Put my mic on here. Alrighty, so Pull up my pointer. So as you can see here, it's 3:53. Got about 7 minutes before the market closes. And as you can see here, the price of the underlying, let me change the color here. Well, I'll keep it this color. So the price of the underlying is extremely far away from my short strike of 36.80 on the put side and my long strike of 36.75. And so, it's safe to say that I'll be walking away with the entire $165 in this account, and then also in the other account $150. So there you have it, guys. It's been a great trading week, again with the exception of Wednesday where I did not trade. So things are going well. 25.56 over the last week and a half. So again, definitely visit my website at cubicleinvesting.com, download my free ebook, and also I sent out a free weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time. So if you download the free ebook, you will start receiving that Cubicle Weekly Reader newsletter. It has a lot of great information, with regard to finances, economics. And also from time to time, I do give, stock investment recommendations and also crypto investment recommendations as well. So you definitely want to be a part of that, the readership of the Cubicle Weekly Reader.